So today we'll talk about a new investment idea of mine, okay, which is called Assertio Holdings. Last week I presented to you Edcore's investment idea, and just to recall, Edcore is listed on the TSX Venture, ticker ADCO, okay. However, today we are going to talk about a different stock, and this stock is called Assertio Holdings, ticker ASRT. Assertio Holdings is listed on the Nasdaq, and today we are going to first take a quick look at this company's numbers so we can already have an idea about what we are dealing with here, right? Then we'll talk about this company's business model, about what this company does, about its story too, which is a very important point in this investment thesis. And in the end, we'll go back to Assertio's financials to take a look at them in more detail, so we can also talk about valuation too. So that's what we are going to cover in today's video. Before we begin, as always, nothing in this video is investment advice, okay? Moreover, if you like this kind of subject, if you like this kind of content, right? If you are an investor, don't forget to leave your like, and I also invite you to subscribe. And with that said, let's begin. Assertio Holdings, as we can see here, currently has a market cap of $64 million. However, as this company holds how much? $53 million in net cash on its balance sheet, so that means that in the end you would be only paying for Assertio around $11 million. That's Assertio's enterprise value. Okay, but what are you taking home for 11 million, right? What kind of revenues are we talking about here? Is this company generating cash already? Well, let's see that now. So for $11 million, for an enterprise value of $11 million, you are buying a company that over the last 12 months has delivered $137 million in revenue, which means that Assertio is trading at an enterprise value to sales of only 0.08 times, okay? That's a ridiculously low multiple. That's a very low valuation level. Moreover, Assertio Holdings is showing a gross margin of 65.5%, as we can see here, which is an excellent gross margin. Moving on, Assertio. It's true that Assertio is delivering operating losses for now. However, as you will understand, I think this will radically change over the coming years. And well, if this company is delivering operating losses, it's natural to expect that it is also delivering net losses, which is exactly the case. However, again, I think that will change, and you will understand why. But one very important thing to understand here is that a lot of these expenses are not cash expenses, okay, such as depreciation of intangible assets. But anyway, I think I will cover that in another video. And lastly, Assertio, over the last 12 months, has also delivered $13.3 million in operating cash flow. So you are pretty much paying here a multiple of only 0.8 times enterprise value to operating cash flow, which in my opinion is a steal, okay? And I expect this number here will probably increase in the next results, in the next report. But anyway, as it is, you are taking this company for a multiple of only 0.8 times enterprise value to operating cash flow. So, Assertio already seems a very cheap company in my opinion. Now, why is Assertio trading at such low valuation levels? What justifies that, right? So, that's what we are going to talk about now. Now we are going to cover Assertio's business model and also Assertio's story, which is very important for us to really understand this investment idea. So first, what does Assertio Holdings do? Assertio Holdings is a specialty pharma company. So, Assertio Holdings belongs to the pharmaceutical sector. Does that mean that Assertio Holdings spends tons and tons of money, millions and millions of dollars, trying to create a new drug from scratch? No, Assertio Holdings is not in that business. they don't, they're not in the research and development business, right? So they don't do that. Instead, what they do is the following. They acquire drugs that are already being commercialized, and then they develop these drugs commercially. So basically, Assertio tries to expand the market for these drugs. So that's Assertio Holdings' business model. Okay, so now let's talk about Assertio's story. And to start talking about that, I want to show you this chart here, which is Assertio's price chart, okay? Which is Assertio's stock price chart. So as you can see here, Assertio has dropped from its May 2023 peak. So Assertio has dropped 92.3%. And as we can see here, this drop was a very aggressive one, right? I mean, it went from $120 per share to $12 per share in a matter of months, right? It dropped like 90% in a matter of months. Now, why did that happen? So Assertio's stock imploded because of the following. Back then, in 2023, Assertio's flagship product was a drug called Indocin, okay? Indocin. And as we can see here, in the end of 2022, Indocin was delivering $100 million in revenue. However, Indocin had a problem. Assertio didn't have Indocin's patent. Assertio was the only company capable of producing indomedacin suppositories, which is Indocin, but Assertio didn't have its patent, which meant that any company could try to discover Assertio's formula and start competing with a new alternative to Indocin. And well, that was exactly what ended up happening. As we read here, from August 2023, Zydus gets US FDA approval for indomedacin suppository, so it looks like Assertio's party was suddenly brought to an end. This piece of news meant that she could forget those 100 million in revenue, because Indocin's revenue over time would end up being eroded by competition. So that's why Assertio's stock dropped like this. That's why it reacted so violently. And Indocin revenue really went down. As we can see here, if in 2022 Indocin was generating $100 million in revenue, in 2024 this number dropped to 26.7 million only. So in other words, Indocin was pretty much destroyed. So again, that's why the market reacted like it did here, because suddenly Assertio Holdings was dead. Suddenly Assertio Holdings had no future, right? Well, not so fast, because there was still hope. Now, why do I say that? Because if on one hand Assertio had lost Indocin, at around the same time it acquired a company called Spectrum Pharmaceuticals that came together with a new drug called Rolvedon. Yes, Rolvedon. Now, I won't get into the details about what this drug does, okay? Instead, I will go straight to what's really important here. But the important thing about Rolvedon is that since Assertio acquired this drug, it has been growing like crazy. For instance, if in 2023 Assertio had delivered $18 million in revenue, as we can see here, in 2024 this number jumped to $60 million. Here, $60 million. And according to my calculations, over the last 12 months, this number is already at $83.2 million. So Rolvedon went from how much? Went from 18 million to the current 83 million. So as I said, Rolvedon is growing like crazy. So yeah, Assertio might have lost Indocin. However, Indocin is rapidly being replaced by another drug called Rolvedon, right? As we've just seen. Besides, Assertio Holdings also has another flagship product, another flagship drug called Sympazan. as we can see here, which is bringing in $10.5 million in revenue. Those Sympazan sales have been kind of stalled. For example, if in 2024 this number was at 10.5, today this number is still at only 10.7 million. 10.8, right? So you're not seeing a lot of growth here. In any case, the important thing for us here is this. Yes, Assertio Holdings might have lost Indocyn's revenue. Okay, however, Indocyn, as we've seen, is slowly being replaced by other drugs. So if the market is pricing this company at such ridiculous multiples because it thinks that Assertio is dead, well then I'm sorry to inform the market, but Assertio is alive and is recovering. And that, my friend, is where our opportunity lies. Because Assertio's recovery has not yet been priced in. And again, nothing in this video is investment advice, okay? But what do I think is going to happen now? Well, first, I think Indocyn sales will continue to drop, maybe to zero, right? But here's the thing. Indocyn sales can only go to zero. And honestly, we are almost there, right? So while we have this downside, Indocyn's downside, which is kind of limited, meanwhile with Rolvedon and Sympazan, we have a lot of potential. So from what I can tell, I understood, talking with the company, that we could see Rolvedon delivering more than $100 million in sales, maybe 150 million. So I think that Rolvedon and Sympazan will continue to grow, and there will come a point in which it will become obvious to everyone that Assertio has recovered, that Assertio is growing again, that Assertio is profitable again too, that it is generating cash, that it doesn't have any debt. In summary, there will come a point in which it will become obvious to everyone that Assertio is a good company and that Assertio could be an excellent investment. So what I ask myself is this: at what kind of multiples could Assertio trade at once that becomes 100% obvious? Once it becomes 100% clear that Assertio has recovered. Because in fact, Assertio's recovery is already showing up. For example, as we can see here, Assertio's revenue started to grow again. As we can see here, Assertio's revenue has dropped considerably, has dropped a lot since 2022, going from 156 million to 125 million, okay? However, over the last 12 months, we are already seeing growth again. We are already seeing growth kicking in, with total revenues currently at 137. So growth is already showing up in an annual basis. As we can see here, Assertio's revenues have grown 9.2% over the last 12 months when compared to the full year of 2024. So that's a very positive point already, right? Besides, gross margin is expanding too. However, we can only see that in the quarterly basis. So let's take a look at it. So as we can see here, in the last report, Assertio's gross margin stood at 72.4%, which is excellent. Simply excellent. In the end of 2024, this number was at 63.9%. So we went from 63.9 to 72.4%. So gross margin is okay, is improving, is not dropping. Besides, in the last quarter, the company finally delivered an excellent operating margin. As we can see here, Assertio's operating margin in the last quarter stood at 28.7%. Excellent. Now, I might do a video specifically about last quarter results, because there are a lot of details here. Okay, so for example, I don't expect this kind of margin to repeat in the next quarter. But anyway, the important thing here for us is the following. Operating margin is indeed improving, okay? And I expect that, okay, in the last quarters, we might not see an excellent margin like this. However, I think that a positive operating margin will become increasingly more frequent. Moving on, the company also delivered net profit, as we can see here, with a net margin of 23.14%, which is excellent. The company's cash generation, I think, was negative, but that happened because the cash from the sales that were made last quarter will only come in the next quarters, in the months ahead. So that's why operating cash flow was negative in the company's last report. However, I think we'll see a huge improvement in the following quarters, okay? So as we can see here, what's important for us to take from all this information I just gave to you, right? The important thing for us to understand here is that Assertio is already improving, is already recovering. Assertio is progressing, is getting better, and this transition and this process and this recovery is already showing up. So I think it's only a matter of time before it becomes obvious to everyone that Assertio has recovered, that Assertio is becoming a really good business, okay? And when that becomes obvious, I don't think the market will keep pricing this company at a multiple of only 0.1 times enterprise value to sales. I think that's a complete absurd. This company is currently being priced as a total failure. For the market, it seems that this company is dead. The market seems to be not buying this recovery story. However, as we've just seen, Assertio's recovery is already a reality. So, to close this video, so first, right? That's why I decided to go long in Assertio. Now, I don't know if I already said this here, but my average price is around here, okay? I have Assertio as a position both in my personal portfolio and in my family's portfolio, okay? So Assertio is a considerable position. But anyway, with that said, where do I think this stock could go? So, with all this in mind, would you say it would be too crazy to think that Assertio could trade at, for instance, 2 times enterprise value to sales? I don't think that's aggressive. I don't think that's aggressive at all. Okay? However, let's remember that today Assertio is only trading at a multiple of only 0.1 times, 0.08 times, something like that. So Assertio is trading at a multiple of only 0.1 times enterprise value to sales, which in my opinion is simply ridiculous. So could Assertio trade at 2 times enterprise value to sales? For me, definitely. Assertio could definitely trade at such a multiple. Now, if that happened, where would this stock go in terms of price, right? So let's say Assertio gets to 150 million in total revenues in 26 and 2027, right? I think that would be totally achievable, okay? So instead of 137, let's consider 150 million to do this calculation, okay? To do Assertio's upside potential calculation. So if Assertio delivered 150 million in revenue, to trade at a multiple of 2 times enterprise value to sales. So to trade at such a multiple, Assertio's enterprise value would need to reach $300 million, right? However, to find Assertio's respective market cap, because we want to know where this stock could go, right? So to find Assertio's respective market cap, we need to consider the cash this company holds. So this company, as we've seen, holds about 50-60 million in net cash on its balance sheet, right? Let me confirm that. So as we see here, Assertio holds $53.1 million in net cash on its balance sheet. So if Assertio has 50 million in cash, if its enterprise value got to 300, so to find the respective market cap, we need to add the net cash the company has, right? So the math would be 300 plus 50. So that means that to trade at a multiple of 2 times enterprise value to sales, Assertio's market cap would need to get to 350 million, considering the cash the company has on their balance sheet. So Assertio's market cap would need to reach 350 million, considering 150 million as total revenues, right? Now, let's remember that today, Assertio's market cap stands at 60 million. And to trade at an enterprise value to sales of 2 times, considering the net cash the company has, so to trade at such a multiple, we would need to get to a market cap of 350 million. So this stock would need to go up 483%. Okay? 483%. However, Assertio could also trade at 4 times enterprise value to sales, right? Assertio's revenue could also get to 200 million, right? So yeah, eventually we could see this stock going 480% up. It's true it could go up less than that. However, if Assertio traded at only 1 times enterprise value to sales, we would still have a lot of upside here, right? So yeah, that's why I'm invested in Assertio holdings. And that's the kind of upside I think we have here. And again, just recalling that nothing in this video is investment advice, okay? But I think the future looks bright to Assertio. Well, and with that, I finally close today's video. So that's it for today, and see you next time.